All right, traders, it is the 22nd of October, 2017. My name is Jameson. Welcome to Behringer Trading. We're looking at a daily vertical bar chart of Iiin Steel Industries. The ticker is IIIN. It's traded on NASDAQ. And first little look, we do have the emergence of some improving relative strength relative to the market and actually the industry. Looks like we're seeing some expansion of the volume. Let's take a look here. So we do have some moving averages on here. I had the 200-day simple moving average, the 100, the 50, the 20, and it's black dotted as the 12-month. So I'm starting to use this a little bit more frequently. One, because Wyckoff's a little bit complicated, and the moving averages kind of conveys the trend changes a little bit more for a layperson. So what do we have? We have this huge drop-off. I mean, with increased ease of downward movement, closing at lows, very climactic, a lot of volume that's here. And then we started to have some secondary tests. So we started to have some organization, and it looks like we're seeing some accumulation. This is why. First, we have a stopping action. A stopping action is defined by the preliminary support, selling climax, automatic reaction, secondary tests. That's phase A. Then we have this washout here. And if you look at this washout of lows, right, we lose lows, because here we are. Here's a low. Dun, 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 dun. Very bearish. And then all of a sudden we wash it out and close by highs. That's a big spring. And if you look at the volume associated with that washout, there apparently wasn't a lot of weak hands. There wasn't a lot of volume. Look at a lot of volume there, not a lot of volume there. A lot of volume, not a lot of volume. And then we kind of consolidate because we just lost this level of resistance. If prices are going to break down, we have to confirm this level of support as resistance. And that's what happens. Look, so prices kind of consolidate underneath this new level. And you know, while doing so, it continues to test this new level of support and no supply emerges. But if you look, we're seeing the emergence of demand off this base of support. So we kind of test this spring that's there, we rally up, we reject it. Another bearish session here with no fall through. This is very bearish. This is an extremely bullish signal right here. I would have bought that. I'm sure a lot of other people would have bought that. And then we would have been stopped out and scared. This is very bearish, and it didn't fall through. The fact that it didn't fall through is very bullish. Somebody here is buying. They're accumulating the supply. This is the overhead float rotating from weak hands to strong hands. And then we start to see some higher lows. We kind of recapture the 20-day, the 50-day. The trend's changing now because the 20 days now it's rising. The 50 is showing signs of rising. We're starting to actually break through this level of resistance here. We're regaining this lost level of support. We've reachieved it, and now we're trading in this longer-term resistance after the stopping action here. This is that key interest, the pivot that exists, and then we explode through with expanding volume. And then we back test and we break back down. Now, here's why I like this. This is where I get a chance to put my money where my mouth is, or Wyckoff methodology does as well. Honestly, I can't tell where Wyckoff ends and where it begins compared to what I've kind of picked up. And it's important that you pick up a methodology because a methodology is really just a lens at which you view the market, and you have to pick things out that mean something to you. So, I mean, it's kind of complicated to learn all this stuff, but there are things that are of value to me, and words that I choose to use that kind of tell a story that again mean something to me. It doesn't mean that you have to use it. You just have to find things of different methodologies that you do like and make it work for you. So the structure here definitely looks like it's accumulation based on the Wyckoff methodology. Now, we do have this rally. This is a very kind of forceful, with a lot of participation, jumping through the level of resistance defined by here, in addition to the 100-day moving average, with increased ease of up movement on an expanding volume. Now, here we are. Huge reversal. This is very bullish, and then what the heck? We give it all back, and we give it all back on almost twice as much volume. What the hell? So this isn't a time just to buy the dip, but you need to ask questions. If we rallied up and it looks like we're rotating from strong hands to weak hands, what's happening here? Okay? And then what happens when we have all the volume that presents? First is when I see all this volume, this is twice as much volume. If we went up on this much volume, this much, why didn't we go down twice as much on twice as much volume? Well, the answer is because there are buyers there. Look at this. We have an ascending bullish channel that's right here. So we have an established level of support. And one, you can define it by your 20-day rising simple moving averages here. So if we don't close near lows, and if we kind of consolidate along this 20-day simple moving average, and we can appreciate that supply is contracting, we need to get long this. The amount of time spent building cause and consolidation while this stock's been in a trading range and not trending would currently give us a price objective of about $33. We're just over about 10%, probably 10 to 15% move there. So your risk here would be, we'll just say, if it loses the 50-day and closes in a 25, you're risking $2 to make what, $6. It's still a 1 to 3 risk reward ratio. That's a great trade, or it's a great opportunity to speculate on a position and take a trade. So now why does this work? So we have this big kind of breakthrough here and then this huge reversal. What happens here, and then why do we oftentimes see this rally? One, because there's some hidden absorption, right? We talked about that. But then, what's psychologically what's happening? We have traders that bought this breakout. They're very excited, and all of a sudden it reverses. They sell their positions here, and now shorts. I think there's probably less than 10% short interest here, but now people see this dropping down and reversing, and they short it, and it traps shorts. Additionally, we have people that just bought this here. They're selling in the, they're selling, taking their profits. We have bag holders here. They're happy to tell their wives, "Hey, I broke even. I didn't lose the car. I had to put the second loan on my home." But what happens here is this folds and this reverses over, and this traps a lot of shorts, and it shakes the weak longs that just bought their position. Somebody's down here ready to buy it, and then again, we kind of nobody knows that if I'm the composite operator and I'm buying all this, how do I know that I own the majority of the supply? I don't. So I remove my interests, and I stop participating because I've been buying. So what happens is I'll just step aside and I'll see what retail's doing. And if I see that this just kind of consolidates through here and there's no more supply, there's no more weak hands, then guess what? That's the feedback that I had to know that I control this company. I control the overhead float. So what do? I put a couple big orders here. I buy. I get retail excited. It rockets up, and then I sell in the strength. And it continues to go up, and I sell it into 33, or as long as this 50-day starts to curl up, and they just continue to offload because they took on the risk here. And then it doesn't even matter what the company's valuation is. Who cares about this? And then what happens? They've removed all their supply, and they know that they were in control of it. So they're like, fuck it, I'm going to go ahead and short it now. So now we start to have some climactic volume. They short it, and now retail's going, what's going on? So they panic, and we go from distribution to markdown to a markup, and we see some redistribution, and if the company's fundamentals continue to do well, maybe we transition from distribution to reaccumulation, and we start the trend and we continue to go up. Well, either way, this is Iin Steel Industries. Very interesting pullback here. This should be on your radar. You should be watching this closely. Hope you have a great weekend. Good luck, traders.